Hello and good morning. For our FIN 562 assignment, we created a well-balanced investment portfolio by choosing 5 companies listed on Bursa Malaysia. These companies come from different sectors: Hong Leong Bank from finance, Petronas Gas from oil and gas, United Plantation from plantation, YTL Corporation from industrial, and Hop Hub Construction from construction sector. This variety helps reduce risk and give us more opportunities for steady income and future growth. We also pick a companies with a different size large cap stock like Hong Leong Bank and Petronas Gas offer stability while mid and small cap stocks like United Plantation and Hop Hub give a higher growth potential. The portfolio includes a low risk options for safety and high growth, peak and a better returns. For example, Hop Hub is more risky but has strong upside while Petronas Gas is more stable with consistent income. Overall, this mix of sectors, company size, and risk level give us a strong and flexible portfolio designed for medium to long-term investors who want both steady returns and the chance to grow the investment over time.
Good day everyone. Hong Leong Bank is a prominent banking group in Malaysia, operating under the umbrella of the Hong Leong Group Malaysia. They offer a comprehensive suite of services including retail business, Islamic investment, wealth management, and treasury banking. Hong Leong Bank boasts a strong domestic presence with over 250 branches across Malaysia and regional operations in Singapore, Vietnam, Cambodia, and China. The bank is recognized for its solid asset quality, prudent risk management, and consistent performance, making it a stable, trusted name for both investor and customer. Now let's dive into the fundamental analysis. Examining Hong Leong Bank robust 5-year financial performance from 2022 to 2024, we have seen remarkable growth, which is revenue grow by an impressive 77% from 2022 to 2024. Earnings per share or EPS rose by 68%, reflecting a strong profitability. The stock price itself increased by 46% over these 5 years. Furthermore, the price-to-earning ratio or PER declined from 30.3 times to 11.3 times. This suggests an improved valuation and potential undervaluation, making it an attractive prospect. Now, moving on to the technical analysis, let's first look at the Relative Strength Index or RSI. The current RSI value of 51.08 indicates a neutral state, neither overbought nor oversold. Interestingly, the RSI has recently crossed above its moving average of 45.78, signaling a potential bullish momentum. This could act as a buy signal, especially if supported by volume or price action. However, caution is advised. If the RSI falls below 45 again, it might signal a weakness or reversal for a potential buy trigger. We will ideally wait for the RSI to cross above 60 or for the stock to break a key resistance level like 20 ringgit with higher RSI confirmation. Next, let's analyze the MACD indicator for Hong Leong Bank. The MACD line has recently crossed above the signal line, and both lines are trending upward. This is a classic bullish signal suggesting a potential upward momentum in the stock price. Additionally, the MACD histogram has turned positive and is increasing, confirming a shift from bearish to bullish momentum and indicating strengthening buying pressure. Past crossover for Hong Leong Bank have shown reliable patterns with a bullish crossover leading to realized and bearish crossover preceding drop. Now, a note of caution from our prospective analysis, we have identified a bearish rectangle flag pattern. This pattern suggests a potential breakdown scenario. The key level to watch an entry price of 90 ringgit and 26, where a break below would confirm the bearish scenario. If the breakdown occurs, our estimated target price is around 80.50 ringgit. The stop price for this bearish trade would be 20.32 ringgit, acting as a resistance or invalidation level. In summary, Hong Leong Bank present a mixed signal in the short term, while RSI and MACD indicator lean towards a potential bullish momentum. The bearish rectangle flag pattern signals a risk of a breakdown. Traders should wait for confirmation of a breakout above 20 ringgit or a breakdown below 90 ringgit 26. However, the long-term outlook for Hong Leong Bank remain positive. This is driven by a strong fundamental performance, including significant revenue and EPS growth and improving PER. The bank's solid asset quality and consistent performance reinforce its stability as a long-term investment.
Good morning everyone. I will be presenting a brief overview of Petronas Gas Berhad, also known as PGB. PGB is a subsidiary of Petroleum Nasional Berhad Petronas, which is Malaysia National Oil and Gas Company. It was incorporated in 1983 and listed on Bursa Malaysia in 1995. The company plays a key role in developing Malaysia gas infrastructure and energy sector, and it is headquartered at the Petronas Twin Towers in Kuala Lumpur. As shown in the table, the stock symbol is PETGAS with the code of 6033, and it operates in the alternative sector. Its current share price is approximately RM 17.90 ringgit. PGB specializes in gas infrastructure and electrolytes, generates income mainly through a long-term contracts, and contribute significantly to Malaysia energy security and industrial growth. Next, let's look at the fundamental analysis of Petronas Gas Berhad from 2020 to 2024. Over this 5-year period, the company revenue showed steady growth from RM 5.59 billion in 2022 to RM 6.54 billion in 2024. The most significant increase occurred in 2022. In terms of the price-earning ratio, it remains fairly stable between 16.92 and 20.59. Expect from 2024, possibly indicating an unusual or one-off financial result. Overall, this number suggests that PGB has had consistent earning and steady investor confidence over the years. A trading opportunity for Petronas Gas Berhad currently at RM 18.04 with RSI at 55.46. The stock is approaching key resistance at RM 18.20, setting up for a potential breakout. Our analysis show healthy consolidation with moderate volume and mild uptrend since May 2025 recovery. The setup is simple: buy above RM 18.20, stop loss at 17.50, target RM 18.08 to 19.02. This gives us 1/1 to 1/1.4 risk reward ratio. Wait for confirmed breakout with volume, stick to your stop loss and take partial profit at first target. Clear level, good risk management, room to move higher. Now, moving on to the next indicators, which is the rate of change or ROC. This is a momentum-based indicator that helps us identify how fast the price is changing over a set period. In this case, we are looking at ROC 9, which calculates the price change over 9 days. Based on the chart of Petronas Gas Berhad, the current ROC value is 3.20 as of 26 June 2025. What is important here is that ROC has recently crossed over the zero line, signaling a shift to bullish momentum. We can also observe that since late May 2025, the stock has been forming higher lows, and this is further supported by a steady increase in trading volume, which strengthen the upward trend signal. To use ROC effectively, the best strategy is to wait for volume confirmation and ensure the ROC stay above 1% to validate that the bullish momentum is sustainability. For extra confirmation, we can also pair this with other indicators such as the MACD bullish crossover to reduce false signal. Next, let's look at the price pattern for Petronas Gas Berhad. On the chart, we can observe a bullish reversal pattern in the form of double bottom, which happened around RM 15 during March to April 2025. This pattern is important because it often signals a potential upward reversal. After a second bottom in mid-April, the stock began a strong upward movement, forming an uptrend structure with higher highs and higher lows from April to June. Currently, the price is near the resistance level of around RM 18.1550, which has been acting as a ceiling since late June. We also see some sign of slowing momentum as volume tapers off near this level. If the price can break above RM 18.50 with strong volume, it could signal a continuation of the uptrend. However, if it fails to break through, a pullback might happen. Overall, the pattern remains bullish, but we still need confirmation, so it is best to keep an eye on how the price behaves around this resistance zone. To conclude my presentation, let's take a quick look at both the short-term and long-term perspective for Petronas Gas Berhad. From a short-term perspective, the bullish scenario has high probabilities, supported by positive ROC momentum, strong price recovery, and strength in the oil and gas sector. If the price breaks above RM 18.20 with volume, there is a potential move towards RM 18.80. On the other hand, there is also a bearish scenario, although it is considered low probability. This could happen due to false breakout, declining ROC, or profit taking. If the price breaks below RM 17.50, it may drop to RM 17 or even lower. From a long-term perspective, the outlook is supported by the strong fundamental. The estimated earning per share for 2024 is RM 1.80 with a price to earning ratio of about 16.5 times. The company has stable cash flow from its pipeline infrastructure business, and it offers a dividend yield of around 4.5%, which is attractive for long-term investors. If the momentum continue, the price could reach between RM 20 to RM 21 within 6 to 12 months. But if a breakdown occurs, there is a strong support at around RM 16.80 based on the long-term price base.
Today we'll be presenting our analysis on United Plantation Berhad, a leading Malaysian palm oil producer. The company is recognized for its sustainable practices, high yield per hectare, and financial stability. Financially, this company has shown a consistent strength. Revenue in 2024 reached 2.2 billion ringgit, rebounding from 2023. A high PER of 18.7 reflects market confidence, supported by solid earnings and low debt levels. Let's begin with the MACD indicators. The MACD line is at negative 0.111, slightly below the signal line at negative 0.145, with a small histogram value of 0.033. This shows a low momentum, but also potential trend shift coming. These two lines are close converging, which is often an early indicator of bullish crossover. In trading terms, this is like a calm before the storms. A crossover could suggest the beginning of a new upward trend. Although it's not a signal to enter yet, it shows that momentum could soon pick up. Traders typically watch this closely, especially when it's aligned with other bullish patterns, like the triangle we will discuss later. Now onto the stochastic RSI, which is a momentum indicator of K line is at 79.75 and D line is at 84.17, both near the above overbought threshold of 80. This suggests the stock is currently overbought, and a short-term pullback could happen if K line crosses the below D line while staying above 80, which will be a bearish signal. However, it's not a guaranteed reversal. If buying pressure continues, the price could still break higher. So while this indicator says be cautious, it doesn't override the overall bullish signal, especially if a breakout occurs soon. The chart shows a symmetrical triangle where price is compressing between higher lows and lower high. This kind of formation builds energy for breakout, typically occurring near the apex. There are two key levels to watch: a breakout above 22 ringgit 50 cents, if supported by volume, may lead to rally towards 24 ringgit or even 25 ringgit. A breakdown below 21 ringgit 50 cents could send the price lower towards 21 ringgit. Currently, the market is in consolidations, but given the positive momentum from both fundamentals and technicals, a bullish breakout is more probable. Overall, This company's strong fundamentals, high EPS, strong cash flow, and a favorable CPO prices align with the technical pattern suggesting a breakout. Combine these factors to support a positive long-term view.
Assalamualaikum and good day everyone. Today I will be presenting a brief analysis of YTL Corporation Berhad, a leading infrastructure conglomerate in Malaysia. Listed on Bursa Malaysia under the stock code 4677, YTL operates in multiple sectors including utilities, construction, property development, cement manufacturing and also hospitality. The company also has a strong international presence in countries like the UK, Singapore and Indonesia. YTL is known for its steady dividends payouts and commitment to long-term sustainable infrastructure development. Now, let's look at the fundamental performance from 2020 to 2024. YTL's revenue increased significantly from 19.18 billion to 30.49 billion, indicating strong growth and recovery. During the pandemic years of 2020 and 2021, YTL suffered losses shown by negative price-to-earning ratios PER. However, in 2022, it returned to profitability with PER at 11.77, and by 2024, the PER improved further to 17.67, reflecting stronger investor confidence. This shows that YTL is on a positive growth trajectory and is becoming increasingly attractive to investors. Moving to technical analysis using MACD or Moving Average Convergence Divergence. Currently, YTL shows a bullish MACD crossover where the MACD line is above the signal line. The histogram is expanding positively, supporting an ongoing uptrend, and there is no divergence indicating a trend reversal. In summary, MACD suggests strong momentum and continued bullish movement. The second indicator is rate of change ROC. Right now, ROC shows a value of negative 1.20, which signals that momentum is slightly declining. However, the best trading strategy is to wait until ROC crosses above positive 1%, ideally with increasing volume and a confirming MACD crossover, before entering a bullish trend. ROC and MACD combined can provide higher probability signals for both entries and exits. Let's look at the price pattern. YTL is currently in a rectangle base or range breakout formation. This means the stock was moving sideways between two levels and has now broken above the resistance, which signals a possible uptrend continuations. So the entry price is 2 ringgit and 62 cents, stop price is 2 ringgit 40 cents, target price is 3 ringgit and 15 cents. This pattern is considered bullish if price holds above 2.55 to 2.60 and continues rising. In the short term, if the price stays above 2 ringgit and 50 cents and the MACD remains positive, we can expect it to move towards 2 ringgit and 60 cents or higher. If price drops below 2 ringgit and 30 cents and MACD turns negative, it may pull back to 2 ringgit and 10 cents. Although this is less likely, long term, if the breakout holds above support at 2 ringgit and 20 cents, YTL has the potential to reach a target of 2 ringgit and 70 cents. So to summarize is, YTL's fundamentals are strong with 2024 EPS of 17.2 and PER of 18.0. The chart shows a rectangle-based breakout with potential upside. MACD and ROC confirm the bullish momentum. Return on assets ROA is estimated above 5%, showing efficient asset use. In a conclusion, YTL is both fundamentally solid and technically strong, making it a promising stock to watch or invest in.
Good morning everyone. Today we present Hohab Construction Berhad MYX 5169, one of the most volatile stocks on Bursa Malaysia. On June 4th, its price stood at 0.060 ringgit Malaysia, reflecting a 98% drop from its 2020 peak. We selected Hohab for its extreme price swings, making it ideal for testing both technical and fundamental analysis under pressure. Fundamentally, Hohab is severely distressed. Revenue has fallen and collapsed. It has been unprofitable for 5 straight years, making its PE ratio inapplicable. These factors place Hohab squarely in speculative penny stock territory. Moving to technicals, first, the Relative Strength Index, RSI. We use a 14-period RSI with SMA smoothing. The current reading is 36.85, hugging the oversold zone. This tells us that while the stock is not in panic sell territory, it remains under persistent bearish pressure. RSI momentum is flat to slightly declining, which implies downside may be easing, but no reversal is visible. Next, we use stochastic RSI, a faster momentum indicator. Our %K is 51.67 and %D is 59.02, both sitting in the caution zone between 20 and 80. A bearish crossover has formed with %K and under %D. This suggests neutral to weak momentum with no conviction for a breakout or reversal. In volatile stock like HOHAB, this typically leads to choppy or continued bearish move unless supported by volume or catalyzed. Finally, the most critical technical pattern we observe is the bearish rectangle. After falling from 20 cents in April, HOHAB moved sideways between 0.050 ringgit Malaysia and 0.070 ringgit Malaysia. This range formed a rectangle consolidation typical before a continuation move. The support at 0.050 ringgit Malaysia has been broken, confirming a bearish breakdown based on the measured height of the rectangle. Our target price is 0.030 ringgit Malaysia. Unless price reclaim 0.060 ringgit Malaysia with a strong volume, the bearish outlook remains valid. Short term, HOHAB is likely to continue drifting downward or test 0.030 ringgit Malaysia, especially if volume picks up.
Lastly, considering both the fundamental strength and technical signal, our recommendation for Hong Leong Bank is a buy for investors with a long-term horizon. For a long position, our target price is 24 ringgit with a stop loss at 20.32 cents. Short-term trading carries a higher risk due to conflicting technical signal. As always, continuous monitoring of both technical and fundamental development is prudent for all investors. Thank you.
A long position is ideal if break above 22 ringgit 50 cents with volume. Target is 24 ringgits to 25 ringgits and the stop loss is at 21 ringgit 80 cents to protect downside of the risk while capturing upside momentum.
If YTL Corp breaks above 2 ringgit 62 cents with strong volume, it may trigger a bullish breakout. The rectangle-based pattern, rising indicators, MACD and ROC, and stable fundamentals from its utility and infrastructure segments support further upside. A confirmed breakout offers a solid entry opportunity.
Petronas Gas Berhad is a solid buy for both short-term and long-term investors. But long-term investment is the better choice for Petronas Gas Berhad. The stock offers stable earnings, a healthy dividend yield of around 4.5%, and defensive exposure through its gas infrastructure business. Investors can accumulate between RM 17.80 to RM 18.20 with a medium to long-term target of RM 20 to RM 21.50. This strategy suits those seeking steady returns with lower risk over time.
In conclusion, we recommend a short position below 0.050 ringgit Malaysia, target price 0.030 ringgit Malaysia based on rectangle pattern. Stop loss 0.060 ringgit Malaysia should the price break above resistance. The trend aligns with both technical weakness and fundamental deterioration, making it a high conviction bearish setup.